So oil prices have been swinging sharply over the past 2 weeks, with huge and unusual rises and falls starting to feel like the new norm. For more on this, we're joined today by Professor Song Soo-young from the College of Business and Economics at Chung-Ang University. Professor Song, thanks for coming on today.
Yeah, good morning to you.
So global oil prices fell overnight following reports that some tankers were passing through the Strait of Hormuz. Can we expect this trend to continue, or will we continue to see sharp swings in prices?
So far, the atmosphere around the Strait of Hormuz has been a little bit relaxed, and that's why the oil price, particularly the Western Texas Intermediate and Brent oil future price has been dropped. But behind this movement of the oil price, that reflects the oil dealers would like to sell as much as possible and as soon as possible, because they expect on April the International Energy Agencies is going to supply the stockpiles of the reserve energy to the world market, and also they expect to pump out more oils from the governments around the world has supplied oils. Therefore, clearly the oil price will go down in the upcoming April unless the war between U.S. and Iran has been elevated to another level, and the total shutdown of Hormuz and some kind of international war has broken out. Then the oil price go up again. But still, the problem is both sides of U.S. and Iran would not elevate the current situation of war situation. That is why that part is reflected partly in the upcoming, the recent decline of the oil price.
Right, and to tackle this rising oil prices, the Korean government has imposed a price cap on fuel last week, but it hasn't been able to significantly bring down prices. Why is this?
Actually, currently, the effect of the price cap actually is going to affect the supplier of the oil, not just the consumers, and particularly the suppliers of oil who has imported from the Middle East countries and through the Hormuz Strait has been affected very much. Therefore, that is reflected in the current sudden surge of the price. However, as the President Lee has pointed out, price gouging also played out very important role. The recent abrupt increase of the oil price at the gas station. So to reduce the bad effect on the consumers' welfare or about the oil at the gas station, government set up the price cap, but that will take time to become effective. And also, the government would like to supply the emergency oil stockpiles to the economy. And on the other hand, what is important is the government would like to set up some supplementary budget to help the importers, and also not only oil at the gas station, but also the naphtha and some production facilities who make some plastics and important outputs from the oils and naphthas and some refined oil. That is a matter of concern right now. So that we are going to see that very slow but gradual decline of the price over time.
I see. And the Korean government is also expected to unveil details of its supplementary budget as early as next week. And this is potentially worth around 15 trillion Korean won, which is over $10 billion US. And this is to support, people's livelihoods amid this conflict. How effective might direct government intervention be in taming oil prices?
Particularly the oil price crisis in Korean economy is more pronounced at some industry level because our industry rely on the much imports from the outside the company. And so our dependency on the oils and the crude oils and also refined oil, naphthas from abroad is very critical. Therefore, so far, the government has a supplementary budget and they have offered some vouchers to the importers and the producers and the manufacturers who make use of the oils to produce some manufacturing goods and to be used for the export outside company. So oil price has played a very important role in a determination of the burden of the production cost for the manufacturing industry in Korea. So that is why the government would like to provide vouchers and help and the importers of the oils and energy-related commodities from abroad.
Right, and the South Korean currency has moved past the 1,500 Korean won level against the US dollar. Why has the Korean won fallen so sharply compared to other currencies such as the Japanese yen or the euro?
Actually, as I look back the past record and the data, so year on year, actually Japanese value has been depreciated 6.78% based upon the year on year. The previous year, the same month point of the Japanese yen values has been depreciated much higher, much stronger than us. So Korean won has been depreciated against the US dollars is just a year-on-year base is only 3.67%. Whereas in the meantime, year to date, from the January 1st of 2026 and the monthly depreciation of Korean won has been more pronounced recently. So this reflects our dependency on some energy source outside the company. Also, the same is true to Japan. So to that regard, the monthly depreciation of Japanese also recorded 3.9%. This is true to Korean won, Japanese yen, and Indian rupee. So some positive correlation between the year-on-year depreciation against some month-on-month depreciation but most of the other countries in Europe and countries has affected most recently because they have year-on-year basis. Actually, their currency value has been slightly appreciated, remained the same as it used to be. So to that regard, the current movement of the Korean exchange rate is not, I don't think, much of concern because this is a very transient and a very temporary phenomena right now.
I see. That's actually good to hear. All right, Professor Song, thank you so much for taking the time today. We appreciate it.
Thank you, and my pleasure.